All right, guys. So Facebook just announced, and they're up big after hours. Last time I checked, it was $25 up after hours. I can get a much more accurate number here, but the point is they crushed on earnings and they beat by 17 cents, and their active monthly users were up from a year ago. So as of this very second, Facebook is up $27 to 202. Here's the press release from Facebook. So here's what they have announced. They have announced revenue was the EPS was up $2.72, which beat by 17 cents. Revenue of 27.91, which was up 6.6% year over year, but it still missed by 310 million. And look at that percentage, 1.2, 1.3%. The family daily active people was 2.87 billion, an increase of 6%. The family monthly active people was also up 6% year over year. The Facebook daily active users up 4% year over year. And it's funny because I think CNBC and somebody announced that their active users were actually down. I don't think that was accurate. And then their monthly active users for Facebook were up 3% year over year. Great news here. They expect expenses to be down in the range of $87 to $92 billion for all of 2022, when they'd originally guided at 90 to 95 billion. And their capital expenditures will be about in line of $29 to $34 billion. So as you all know, I'm a fan of Facebook at this valuation. It's fallen a lot since its peak of 380 or so, over 50% as of this morning. Now, I'm going to show you guys why I believe in Facebook so much from a valuation perspective. So let's go to my 8 pillars tab, and we're going to go to Facebook. So here's Facebook, guys. It's currently at 202, and right now, look at this chart for last year, 384 down to 171, and I think it got there today down to 169, and some weird thing that happened. 5-year PE, 21.72. That's our first pillar. We want 5-year PE below 22.5, and look at its trailing 12 months PE, 13.8. Let me make this a little bit bigger. Actually, let me even see if this is yeah, perfect. Okay. Next, we want the return on invested capital over 9%. The 5-year return on invested capital for Facebook, 15.5. So they do a great job of getting a good return on the money that's invested in the business through equity or debt. Pillar number 3, we want revenue growth over the last 5 years is positive. 5 years ago, they did 39.94. Last year, they did 118 billion. Massive growth, almost tripling the revenue from 5 years ago. Pillar number 4, we want profit growth the last 5 years. 15.93 5 years ago, 39.37 last year, over double. Pillar number 5. Now here's the big thing. Facebook spent almost $10 billion this past quarter buying back shares, and they have more to come. In the last 5 years, they've bought back from 2.86 billion down to 2.82. So they are buying shares back, and that's the plan going forward. All right, pillar number 6. We want their long-term liabilities to be in check. So first off, guys, I'll do something. Here's their cash on hand as of the end of last year, 66.7 billion. Their total liabilities are 41 billion. So they can take all their cash on hand and pay off all of their liabilities completely and still have $25 billion left over. That is an incredible, incredible number. But just to go back to it, we go back to their original page. We look at their 5-year average free cash flow of 23.36. Now for this pillar, we want to take this 23.36 and multiply it by 5. We get 115 or 116 billion dollars. And again, we want their long-term liabilities under that number. And as we saw here, their long-term liabilities are only $20 billion. So they can pay off all their long-term liabilities in under 1 year. And then of course, we go back to focus on their free cash flow. We go to the cash flow tab here. We want to see free cash flow growth for the last 5 years. Now remember, free cash flow is cash from operations less your capital expenditures. And you can use that to do one of 5 things. Pay down debt, buy back shares, pay dividends, reinvest in yourself, or make acquisitions. We have added this line to the free cash flow statement that doesn't exist in other software. 5 years ago, they did 17.5 billion. Last year, 39 billion, over double their free cash flow. And finally, for the metric that we care about, we take their average of the last 5 years free cash flow, 23.3, multiply it by 20, and we get $466 billion in value that we want to start at. And if we look at their market cap, it's actually 560. So it's a little higher, but I'm not worried about that. And if you see our 8 pillars tab, that's the only one that's a little bit higher right now. The reason I'm not worried about that right now is because I think Facebook has a lot of growth in their per user revenue and per user profit they have yet to do, right? So even though their per user growth is stagnant and only growing by 3 or 4% a year, they still haven't maximized how much they can make on revenue. Plus, they still haven't maximized Oculus or the Meta platform for their revenue per user. That's going to be huge. That will drive the revenue and profit per user to a whole new level, and that will beat their revenue, their actual user growth, in my opinion. So let's go to the stock analyzer tool and use the stock analyzer tool to figure out what we think will pay for Facebook today based on a long-term outlook. So I look at 10 years from now. Let's be conservative. Let's call it 6, 9, and 12% revenue growth in the next 10 years. Profit margin, I'm going to go 29, 31, and 33% profit margin. Same thing for free cash flow. And for P, I'm going to do 13, 15, and 17, and 13, 15, and 17 for the price of free cash flow as well. These are low numbers, especially for the largest social media business out there that has quite the strangle with WhatsApp, Instagram, and Facebook, and now Oculus. They are the leaders in their areas for social media and virtual reality. Desired annual return, I always put 12.5%. It gives me my margin of safety. I hit the analyze button. And guys, this is why I'm a buyer of Facebook. Even today, it was below this low multiple. So if I believe they can grow revenue by 9% a year, and that includes 31% profit margin and free cash flow margin, which is lower than they have now, and sell for a reasonable 15 times, I think it's a buy. Now, do I think they can beat that? Yes, potentially, because I don't think they've maximized their revenue per user at all. And I think they have a lot more potential in the future. Now, does that mean there's going to be a lot of growth there? Absolutely. But I'm still a believer in Facebook. I think and by the way, this doesn't include any buying back of shares, which I think if they continue to buy back shares at those values, you'll be getting a much higher piece of the pie as time goes on. So everyone, I really, truly believe that Facebook for me is a company I'm going to continue to buy, continue to own, and at these low levels. Did it make sense at 380? No. As you can see from there, 380 was even higher than my highest guess, but this is what value investing is. Value investing is about taking some sort of mispricing of information and deciding, is the mispricing accurate? And if it's not accurate, why is it not accurate? Now, I thought this mispricing was inaccurate because everybody freaked out last quarter because of their daily active users had fallen and they were guiding on revenue and revenue growth and profit much lower levels. Everybody freaked out and the stock plummeted from 380 down to a low of 170. That's a big plummet. Doesn't mean, look at Peloton. Peloton fell from 180 to 35 or 40. And I still thought it was not a buy, right? So it all depends on the metrics at that standpoint. But I still felt with Facebook that even though they're a mature company in terms of users, they have 3 billion active users on all their platforms. The earth is 7.5 billion people. I mean, how much more are they going to grow? But they have not maximized that revenue and profit per user. And once they're able to keep growing that and get to that point, that's where we see the massive upside potential in Facebook, in my opinion. And this is one of my holdings. This is one of the ones I'm increasing my position on. I've sold puts on it today. I sold puts at 130. It was yielding me about a huge return because it was paying a huge number because of earnings coming out. So where's Facebook this very second? Facebook right now is at 204. So it's who knows what's going to happen tomorrow? Who's going to know what's going to happen in the next few days? But I'm a believer in it. I'm going to keep buying it. Do your due diligence. Do not buy it just because I'm buying it. I can be wrong. I have been wrong. And it takes a lot of patience to sit there and wait. My thesis is, do I think Facebook will be around 10 years from now? Yes. Do I think the revenue and profit will be much higher today than it is 10 years from now than it is today? Yes. Do I think it's selling for a fair value based on that today? Yes. Therefore, I'm a buyer. That is my entire thesis on Facebook. I don't know where it's going to go, but as more information comes out, this is a very important earnings report for me because as more information comes out, I have to make a decision whether my analysis is correct or my thesis still stands. And as of these reports on these earnings, my thesis still stands. Thanks very much.